What's going on, guys? Nick Dark here. This is going to be another video for the Forex League market lessons. This one specifically is going to be on moving averages. So let's get right into it. So you guys have probably seen these, multiple lines like these dotted lines here, these dashed lines going across our charts and kind of wondering what they are. These are moving averages. So essentially what these do is it takes the average of candles, an X amount of candles, whatever you choose. You can change the period. We'll get to those actual specifications in a second when we jump to a chart. But essentially, it combines the average and kind of smooths it out and represents it in the form of a line. So moving averages is what we see. That's what these indicators are. Essentially just that average, right? So we use them in a way to, kind of establish a trend. Depending on the period, we look for, structure formation with them as well. We're looking for confirmation with them as well. So there's a lot of different ways we can use them. But for the basics here, red over blue is showing a bearish trend, and when they're sloping down. So you can see how this is very bearish movement, right? We're getting lower lows, lower highs, and the moving average are kind of just bouncing off that, acting as resistance, pushing price action lower, right? So it's just following that trend. Red over blue is bearish, whereas, blue over red is bullish. So that's when a transition happens, when you'll see a cross, and that's when typically the trend will change. And you can see the bullish movement here is represented in blue by this line. So you'll see the cross happened here. Price action is going bullish. The trend is then changing, and now the moving averages are acting as support and kind of following the trend, from the supportive perspective on the underside here. So blue over red is bullish. Red over blue is bearish. Okay, so these are moving averages. Let's go over to the chart and kind of get into some specifications. So I actually use three. So I'll use moving average 18 to close, which is this one in red, right here. It's this red one. EMA 8 to close. It's this blue one. So those are the short-term ones. So essentially the EMA, the blue one, is measuring the average of the eight candles, right? Whereas the moving average 18, the red one, is finding the average of 18 candles, okay? And then we have 200 EMA, which is the average of 200, previous candles. In this, the higher time frame one, or the higher period one, is essentially more of a smooth trend. It's more of an overall outlook. So like you could see in here, like this is a bullish trend, this is a bearish trend, this is a shorter bullish trend, bearish trend, bullish trend, bearish trend. So these smaller period moving averages are more so capturing the trend of super current price action, again within the last 8 candles, 18 candles. Just capturing the shorter term trend, whereas the 200 is kind of giving you the overall trend. So we can see that this is clearly bearish, right? We're getting lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and so on and so on. The 200 has kind of just been highlighting the fact that this has been a very bearish trend, right? Very smoothed out, not reacting too much based on these swings. It's just kind of highlighting, guiding the overall trend and showing that it's bearish, right? Whereas the shorter time frame ones are, they're coming down, they're crossing up, they're crossing down, they're crossing up, they're crossing down and up and down. So, much more current price action for the smaller trend, moving averages, lower periods. Okay, so what we're going to do here is we're going to just highlight some crosses. I'm going to start by highlighting some bullish crosses, and then we're going to get into some bearish crosses. So first, some bullish crosses, right? Here's a good one off the bat. All right, we can zoom in on this actually and just kind of explain this. Right, so price action is bouncing off these MAs, acting as resistance. Again, resistance, we're getting some consolidation. The MAs are now flatlining. We're getting some higher lows, a transition in price action, and then we have a cross. Right, price action blows through the MAs, retests as support, and then carries higher and higher, and then just rides these MAs, pretty much acting as support all the way up to the 200 EMA, where we see a double top, and then we see a bearish cross. So we can go ahead and do a bearish one there. Okay, we're just going to be following price action, following these moving average crosses. So you can actually capitalize on these. So guys, if you're familiar with, there's a lot of confirmations here. This is definitely an entry, and the way we use moving averages is a cross. A moving average cross is a confirmation. So you can combine that with a lot of things. In this specific example, we have, bearish engulfing, moving average cross. It's a double top pattern. We can clearly see we're breaking structure down here. This is a confirmed lower high because the overall trend is bearish. So there's a lot of things coming into play here, and the moving average just is another confirmation to get you into it, like a really good entry. You want to see closure below a moving average to confirm the cross. Okay, so now I went bearish here, right? Bearish, bearish, bearish. boom, slow down in price action. Moving average is kind of flatline. You get a bullish cross here. Okay, bullish cross there. And then price action is going up a little bit. Get a transition again, little head and shoulders pattern. Bearish cross. There it is. Another bearish cross there, right? We get moving averages acting as resistance, going to a new lower low. We got it here. Then we saw a transition in price action where it broke through this minor resistance, tested a support. Price action surged higher, creating a bullish cross. Okay, let's highlight that. There's a bullish cross. Now the MAs are acting as support. Price action is going higher, reaches his prior lower high, kind of flat lines, and then drops below the MAs, retests, and then drops again. So this is a bearish cross right here. All right, so again, it's always good to enter after you've seen like a transition happen. Make sure you're with the trend. You see a lower high transition. Anything that's going to confirm, like let the moving averages be kind of one of your final confirmations, because you want to see, candlestick closure below the MAs. That's typically, so like if we were taking a short here, I wouldn't short until I saw this bearish engulfing close below the MAs. Okay, so the moving average it's kind of one of those final confirmations that really just kind of ties it all together. All right, and then now we're getting a bullish cross here. So price action was acting as, or was dropping. Moving averages were resistance. Now it's kind of flatlining. We got a transition of price action here, and then we got a bullish cross right here. And there it is, bullish cross. All right, so guys, this is, very simple. We're just highlighting crosses here, kind of bringing it to your attention where these lower time frame trends were changing, transitioning to the downside or upside, and how they kind of just played, on this chart here. Now, again, this is the weekly chart, but this concept is exactly the same on all time frames. You can find moving average crosses throughout time frames, all the way down to like the 15-minute, wherever, or pretty much wherever. So, always looking for the same thing. You're always looking. This is a price action method. We're simply following what price action is telling us, looking for potential entries, combining a lot of different factors, and for confirmation. So, like again, this is just a great example. You got that double top, and you're looking to enter on a cross. So, huge bearish engulfing. It's a lower time frame break of structure right there. Rejects off the 200 EMA. Gives us a nice bearish variation. Closure below the MAs. That's where you would potentially enter, right? So something like that. So this is again, you can use this on any time frame. A very, very useful tool. But copy these settings down, test them out, guys. See how, highlight some of these on your own. So I mean, moving averages are a really, really good confirmation tool if used properly. Okay, so again, we'll also use moving averages in a way to kind of determine structure. So I'm going to give you this one example here, and that'll be it for this. So let's fit from the high to the low here. I guess we'll go all the way to the low. Let's see if this makes sense, actually. Give me 1 second. Yep, okay, so we're, there's a bearish trend on the weekly here. We had this huge push to the downside. Now the transition happened. It's pulling back. Price action's pulling back. We want to see a structure level hit. It hit the 38.2, right? That's a good level, but it kept going higher. Hit the 61.8. Good. That's a great structure level, but then continued higher, all the way up to our 78.6, which was prior broken support over here. You could see where it broke, literally right there. Right, you can see that how price action broke through, retested, and then dropped. So it came back all the way up to here, 78.6. Let me just highlight this zone for you guys. Pretty much right there. Turn the background on. All right, so price action came back to the zone, form structure. Boom, that's one confirmation. It's hitting the fib level. Then we have a double top, 2 confirmations. Rejection of the 200 EMA in this area. Huge bearish engulfing candle right here. That's a 3rd confirmation. So let's go ahead and make this yellow. 3rd confirmation, closure below the MAs and this level right here, which is a lower time frame support. Let's make this 1.5. Where'd it go? 1.5. 1.5 right there. So closure below that level and the MAs. 2 more counts of confirmation. We would take an entry on that, and this is what that trade would look like. So this is how we use moving averages, guys. You want to see the first pullback, because when you see, all right, so like this is a huge retracement, and we saw a bullish cross here. Now we're not going to take a trade on that, or I wouldn't, on a lower time frame, because the overall trend is bearish. So this gives us a chance to, pull back through the MAs and then give us an opportunity to cross the MAs on a bearish setup, which, again, adds to that confirmation, right? That's what we want to see. So this would be the trade, target back down towards 0%. Stop loss would be outside of significant resistance and this lower high. And this is a 2.6 risk reward. This would have been a really great trade. Would hit TP somewhere over here. But again, don't mind the time frame, guys. We're literally just doing structure analysis, price action analysis. This setup can happen on any time frame, any single time frame. The concepts are exactly the same, okay? So this is just one example of how we would use moving averages for an entry. So again, guys, thank you. This has been another video, market lesson series on moving averages, and I'll see you in the next one.